getting a little bit more perspective for us is Nauman Sheikh. He's head of protocol and treasury management at asset manager Wave Financial. Welcome, Nauman.
Thanks. Good to be back.
Glad to see you again. So before we go into some of the more macro stories, of course, got to ask you about Silvergate. You just heard our colleague Nick Day talk about some of the issues involved in their issuing or not issuing yet a 10K, and the potential of them not being able to continue as a going concern by the end of 2023. What's your reaction, and how do you think it affects the crypto market?
Well, firstly, I'm surprised that crypto hasn't reacted more strongly to the news. Bitcoin is still above 23,000 because if in the worst case scenario, it has a major impact, in my opinion. Silvergate is stuck in a doom loop. The fourth quarter lost $1 billion. It's been forced to sell assets at fire sale prices, so I'm not surprised by the capital shortfall. I mean, the more important bit about Silvergate is its SEN network. All the market makers within crypto, they regularly use the SEN network to transfer digital currencies and fiat currency to other Silvergate accounts and to other brokers and to other counterparties. And if the question of Silvergate being an ongoing concern, if it becomes a reality, that's a major player that's out of the market, and there aren't many competitors out there. I mean, there's Signature Bank, but even Signature Bank is cutting ties with non-corporate clients as well. So it is a big issue in terms of liquidity and a possible liquidity crunch. And in terms of crypto, how it would react, it hasn't reacted, right? And my sense is that it's just a matter of time. There's a lot more at play right now, right? It's a whole macro factor behind it as well.
So when you have that perspective, and then against it, you have, as I said earlier, the 10-year yield in treasuries is above 4%. It indicates that at least the risk-free rate in the markets is a lot higher than it was just a few months ago. And we just got this jobless claims data come in showing that unemployment is lower than even the market had expected, or potentially will be lower than expected, and that the Fed might be poised at least to raise rates to, I don't know, another 50 basis points when they meet again in 3 weeks or so, a little under 3 weeks. So do you think that this takes away from interest in crypto even more? Do you think that this makes crypto less appealing compared to other avenues that investors can take, and that we might see some downside going forward in crypto?
Yeah, I think it's more of a risk-off flow at this point. I mean, for a brief period there, we saw crypto correlation go down versus other risk assets. But this entire, all the data points coming out about the stronger economy and the rate volatility that we've seen, the volatility in the interest rates, I think the chances that the correlation will continue to go down there, it's pretty low. Crypto is going to recouple, and the rate volatility hasn't even translated to equity markets yet, let alone the crypto market. So I think the next shoe to drop is the equity market, and then crypto will follow right afterwards. It's the reason we didn't see a break past the 25,000 resistance in Bitcoin. It was just people didn't believe that it would continue to recouple against the backdrop of what's happening in the macro environment.
All right. What about the alts? What are you seeing there? And Ethereum's Shanghai upgrade is imminent. Any impact you see on the horizon for the ETH community?
Yeah, I mean, the performance of ETH has been pretty subdued, and a lot of it has to do with concerns about, the large-scale selling of ETH once the Shanghai upgrade takes place. I personally think it's overstated because the withdrawals will happen in a sort of trickle-down fashion. It's not going to be all at once. It's going to be over time. So for the prospect of a sudden dump in ETH, I think it's not going to happen. Plus, you have a major de-risking event with this Shanghai upgrade. So you have a lot of institutions on the sidelines waiting to see how this works out. If it works out well, you'll see a natural bid come to the market, provided the macro environment stabilizes. So if ETH does go down, I don't think it'll be because of withdrawals. It'll be because of macro and the sell-off in the crypto space in general.
Yeah. And also controversial plans developed over the last crypto bull run to expose 401k retirement savings plans to the wild swings of the Bitcoin markets. And those are being expanded to include a handful of smaller cryptocurrencies, potentially opening up the near $7 trillion 401k market to crypto. What are your thoughts on that, especially since we've seen the crypto markets in such a bear market cycle over the past year?
I think it's to expand the Coinbase. It's no pun there, but to expand the list of coins to the 401k. I think it's a little too early for that. I mean, we're still going through regulatory scrutiny, between Bitcoin and ETH and all the other currencies. So my personal opinion is, okay, let's kind of develop the market for Bitcoin first, all the majors, before expanding the list. But it's definitely a long-term goal for everybody. To increase the sort of mass adoption in the currencies. But I think it's a little too early to expand that list.
All right, Nauman, thanks for joining us this morning. That was Wave Financial Head of Protocol and Treasury Management, Nauman Sheikh.